Yeah, man. So this is a very popular topic we're talking about today.
What you got?
Timing the market versus time in the market. What you got?
Yeah, man. It's pretty impossible to predict the market. It's pretty impossible to time the market. A lot of people read articles or they have a hunch or some type of crystal ball, but ultimately, it's not a possible thing.
Yeah, but many of us have tried, including you and myself.
Yeah, I mean, I definitely try to time the market. When I first started, I kind of made my first initial plays without even thinking about the market. I just kind of got in.
Yeah.
But when I took my gains recently, I knew that there was going to be some type of a crash. And I just made the plays anyway. And if I would have listened to myself trying to time the market, maybe I would have a better return as of right now. But, you know, it is what it is.
I mean, to me, right? I mean, there's only two reasons to trade. I think
Okay.
you need some capital, which makes sense.
Mhm.
You need money, or you feel like that company's about to be set on fire. I mean,
Right.
you feel like that company is no longer going to be with us. Blockbusters because of Netflix, Toys R Us because of Amazon.
Right.
Yeah.
No, that's interesting that you brought up Blockbuster, and we'll get back to the time in the market conversation. But I just watched a documentary on Prime Video about Netflix and how they literally just devoured Blockbuster. And it was based off of, because they had the competition, right? Where they did all the online, they had the total access, and they were pretty much competing with Netflix. But they had a new CEO come in, and literally that new CEO said, let's go back to the stores. we're gonna go away from the online idea, and literally within a year or two, they started filing for bankruptcy. That's so crazy. But yeah, and I understand what you're saying. Like, unless you know something like Enron, something like that happens where you need to pull out all your money, or Netflix, or even some of these oil and gas companies in the next 10 to 15 years. I don't know.
The oil and gas one's it's a dicey one. I don't know where that's headed. I can't. I know the boom is coming. I just don't know when.
Well, man, they have some initiatives out here that that could save the environment, and I think a lot of people are joining that wave with the solar panels and the electric vehicles. And I feel like eventually, the oil and gas industry might dwindle, but I'm no expert.
Well, I mean, here's the thing with oil and gas, right? And I know we're supposed to be talking about time in the market, but I have to say this.
What's up?
Do you know the position you never want to be in? Whether it's in sports or in business. Well, in sports, maybe it's different, right? Mm-hmm. But in oil and gas, you have literally the smartest people in the world in a race to wipe you out.
Okay.
So there's people so smart that they're talking about building nuclear factories on Mars and transporting the energy back to Earth.
Wow. I mean, I haven't read anything about that, but that sounds intense. You know what I mean?
But that's how hard they're gonna for you if you're oil and gas. It's right. Like if you're LeBron in the NBA and, a former league MVP gets with another current former league MVP to start a super team to beat you, Golden State Warriors. Yeah.
Okay.
That's basically what's gonna happen.
I see what you're saying.
Oil and gas.
So there's gonna be a war eventually. There's gonna be a battle head to head.
It's already started. I mean, you have Elon Musk. He's a pretty bright man, and he's coming after oil and gas. Again, whoever the guy is that's talking about building nuclear, factories on Mars and transporting the energy on the ship back to Earth. You have those people. I mean, what we just discussed is why some people try to time the market, right?
Right.
Some people believe, hey, the next new thing is on the way. Out with Microsoft. Apple's killing it with computers now. But guess what? Microsoft is still here.
Yeah, IBM as well.
Yeah, because they innovated. Yeah. They moved on to other things, cloud services. They leaned into the Office suite.
Right. I mean, if you think about, if you go to, CVS or some type of local drugstore, you're going to see those old IBM computers.
Yeah.
But that's not all that IBM is, right? They
Yeah.
definitely innovated their services to, meet the times and keep up with Microsoft and Apple. So I definitely understand what you're saying.
Yeah. So if you're invested in a company that you believe is going to stand the test of time, I mean, historically, right? The market goes up. It goes up on average 8 to 10% a year.
Yep.
Right? Some years better, some years worse, but over time, that's what you get. And so, I guess this is what it all boils down to. If you're going into the market to make a quick buck, you're not a stock investor. You're a stock trader. And that's a whole other different thing.
Sure.
But if you want to invest your money, put a place where it can sit and grow and work for you, you have to only invest in stocks in companies that you believe are going to last, or in a good index fund.
Yeah, I don't disagree with that. I feel like maybe you could do both.
Okay.
Right? So you could have, like, for instance, I'm invested in NIO because I believe that it's going to be a big energy efficient electric car company. And I feel like that's Tesla's competition, and there's a market share for NIO, right? And so I put a little bit aside for my timing the market game and stuff like that. So you could effectively do both, but as long as you're in the market, you can't go wrong with that. And I think there was a statistic from Morningstar that stated if you were in the market, 5,000 something days, something like that, you were going to get 7.2% rate of return. And if you were to miss 10 days without being in the market, you were going to be somewhere between, I think it was like 5%.
Mm-hmm.
So that's a 2% decrease. And then add another 10 days, you were going to be somewhere between 3%. And then add another 10 days, 1%. And then another 10 days would be negative 0.9%. So you definitely want to stay in the market as long as you can.
Yeah, I definitely agree with that. And I mean, and those are the winners. Like everybody I know who's proud of their stock portfolio on Instagram, they've been in the market for years. Like shout out one of my boys, Sleepy Cell. He's killing it with the stocks, and he's been in the market well over 10 years, and he's not even 30. So,
oh wow,
yeah, and he has all the gains to show it. Show and prove, and it's that time in the market. Pick companies, pick them right, stick with them. I mean, because at the end of the day, stocks, right? There's people who research and get paid to trade stocks all day.
Right.
And I just think the average Joe should not be trading every day. That's why I always recommend an index fund, because that's what you call passive investing. You're in the market. Your money will beat, over the course of a year, the 1% you'll get from a savings account.
Right.
And then after you've had it for longer than a year, at most you'll pay 20% taxes. And for some tax classes, you'll pay 0% of taxes on your gains. I mean, you can't lose.
No, I don't disagree with that at all. It's interesting because back to time in the market, we had, one of my courses, we had an objective to predict a stock price.
Okay.
And quite frankly, we did not predict the stock price at all, right? Mm-hmm. I mean, but we performed a multiple linear regression, which is you take the stock price as your outcomes. You should have at least 120 outcomes for this data, and then you'll have your dependent variables, which could be, your gross income, or you could take telecom sales or revenues. You could take the year, whatever you decide your variables are going to be, and then you could perform this regression on Excel, and it would produce this formula, which is y equals a plus b times x.
Wow.
And once you take your coefficients and you enter them into this equation, you could then get that stock price. I would not advise anybody to perform a multiple linear regression to try to, predict the market, but it's something that people do. And I think we predicted that AT&T's stock price would increase by 10% back in 17, and it actually did that. But as you can tell, AT&T is now going down. So anyway, but yeah, it was interesting. So I definitely wouldn't, try to predict any markets out there. Definitely timing the market is better than timing the market.
And does it apply any differently to single stocks versus index funds?
See, when you get with the single stocks, I feel like you could have a better upside. It just depends on the type of research that you're doing. But unless you have some type of insider trading situation going on, I mean, I wouldn't even advise anybody to, think about it any differently. That's why I kind of stick to my ETFs and companies that I believe in, like you say. Mm-hmm. So I'm always invested in companies that I use on a daily basis, which is Microsoft. I have a Surface Pro. I have actually 2 of them, and some Apple products. So yeah, I'm actively investing in things that I believe in. And technology is something that I love. So, like I said, FTEC. I can't go on about it.
That's funny. I was reading an article today about this new company. They're in the UK. They've actually been around for a second, actually. They're not brand new, but they're looking to join Wall Street in the next 18 months. They're already publicly traded in the UK. And it's a company called Hipgnosis. And they actually buy the publishing rights to artists' music.
Oh, wow.
So right now, I'm aware that they're heavily invested in rap. Like, they own half of RZA's catalog. They bought some of Dark Child's catalog. I think they own No ID's catalog completely. And they're treating publishing as assets. And once they go public in the U.S., this will be a company which basically you can invest in the artists that you listen to. Because they say, I mean, I didn't do the research, but they say that music catalogs is the most predictable asset in the world.
Wow.
That's what they say. So, I thought that was a very interesting company, and I'll be checking for them when they debut in the U.S. It's called Hipgnosis.
Hipgnosis.
And basically, it's creating a stock market for people's music.
Right. So, is it like, do they have like a bidding war on like Michael Jackson's catalog?
Well, so here's the thing. It's not a bidding war. What they're doing is they're approaching artists, popular artists, people who have had their hands in a lot of songs is what I'm noticing.
Okay.
Like RZA, I think, has had his hand in 802 songs or something crazy like that.
Sure.
And they're just throwing a lot of money. I don't know who's backing them, but they're just throwing, they haven't disclosed how much, but, some believe even 9 figures have been thrown out there to some people for their catalog.
Okay.
And they're just housing and collecting all those royalty checks. And, if they license it for a movie, they get a check,
Right.
Yeah. So, it's interesting. I'm curious to see where that goes.
You know who I think needs an IPO? Either the GOAT app or StockX. I feel like StockX kind of has a great idea when they could value your sneakers. And I feel like if they came out with an IPO, that'd be interesting. Just because it's a stock market.
I feel like it's coming for StockX.
Yeah.
I feel like it. I'm not 100% sure, but I feel like that's on the way.
That'd be dope.
I feel like it.
I actively use that.
StockX?
Oh, yeah.
What's the last kicks you copped?
The Travis Scott 270s.
Life is good.
Life is not good.
Life is good, man.
Also, don't use a firm when you're copping your sneakers, all right? Pay cash, okay? Anyway, moving on.
Nah, man, I'm using a firm and getting all the sneakers. Are they gonna come repo your kicks?
That's a good collections.
What about I use a firm to buy the shoes off of StockX, turn back and sell the shoes on StockX and just never pay a firm?
Nah, because it's a part of your credit history.
I mean, but if you...
Nah, man, nah.
No. Buy some red Octobers and flip them and made $20,000.
I don't disagree with that plan, but you would have to pay the firm back. As long as you do that, then... Never mind. Don't. No.
I'm trolling.
Not at all.
I'm trolling. Everybody loves debt so much. I was like, why not?
I know, right? I mean, there are good debt out there. You know, there's some good debt, right? You could leverage that debt, but
you know what? Next week's video, we're gonna talk about good debt versus bad debt, and I'm pulling no punches.
I'm down with that.
I'm pulling no punches.
I'm down with that. Let's get it.
But all right, man. Moral of the story is, I know we've rambled. Time in the market versus time in the market. Buy some companies you believe in. Keep the money there. Make a monthly budget for investing and invest in whatever proportion to those companies that you want every month.
Correct. I don't disagree with that. Guys, you know, you're not the best investor of all time. You're not Warren Buffett. So just, you know, pick the stocks that you believe in, do your research, and stay in the market as long as you can. Unless you need the income, as Chris puts it.
Hey, one last thing though.
What's up?
What about, let's say they follow our plan to invest a certain amount monthly, right?
Sure.
Should they still invest that money in times of uncertainty right now, like right now with the elections coming up?
I mean, yeah, why not? I mean, you definitely, because of the dollar cost averaging, you're going to get those lower dips, right? So why wouldn't you? Why wouldn't you take advantage of the uncertain market right now? I don't think there's going to be a market crash because historically it always recovers.
So I'm with you. Buy the dips.
Yeah.
Buy the dips like you just ordered appetizers at Chili's and you're waiting for it. Buy the dips.
Buy the dips.
All right, man. But that rounds out that time.